YMP on, so this is YMP on episode 4, and today we have Pierre Lassonde, chairman of Franco-Nevada. Hi, Pierre. It's a pleasure seeing you again.
Well, thank you very much for having me. It's always a pleasure.
Thank you. So I'll ask you a couple of questions that we received from our members because everyone is eager to hear your thoughts on what's going on. Well, first question I have is, what is your take on the policy measures that we're seeing in the current context, which is quantitative easing, monetary stimulus, lowering interest rates, and I guess at the same time, I'll ask about the valuation of the US dollars.
Well, what we're living through right now is unprecedented. If you look at the front page of the Financial Times this morning, they're saying that almost 200 million jobs will be lost in this quarter. That's unprecedented. Like, it's never been seen in our lifetime. And it's the equivalent, really, of war, if you want to look at it this way. So the impact on the economy, on the world economy, it will be very profound. And to try to mitigate some of it, because governments can't mitigate all of it, the impact is way too much. Governments around the world, from Japan to Europe to the US to Canada, as we know very well, are rolling out a number of fiscal and financial policies that will result in the creation of the kind of money that we're talking about. When I was a kid, it used to be reserved for astronomy. Like, they're so big. The numbers are so big. They're just unbelievable. And with that, there is a definite, view, I guess, that it will end up creating inflation, and that you will see a debasement of the reserve currency, which is the US dollar, against gold. But you will see a debasement of all currencies. So, that's what's most likely to happen.
And what might be the impact of COVID-19, do you think, on exploration financing?
Well, when it comes to the mining business, there's a bit of a disconnect right now, and it's been going on for a number of years. If you look at the financing of the mining exploration part of the business, it's been almost absent now for the past 5-6 years. And even before that, it was on the low side. So has that changed anything at this point in time? The answer is no. It's still very much risk off. Like, the markets are not interested in putting money in juniors. And you can understand. I mean, right now, people have to worry about their jobs. They have to worry about making mortgage payment. They have to worry. So are they going to be willing to take chances on, junior stocks? And no, the answer is no. And in the early phase of a recession, gold usually doesn't do that well. It's mostly when the policies to get out of recessions are put in place, that's when gold really does well. So I don't see, if you want, like a big amount of money going in, and you can pretty well judge that by the amount of inflow taking in by gold funds. If you want to know whether or not money will flow to juniors, just look at the inflow of money into gold funds, and that will be the answer. And for the past 5 years, it's been an outflow, not an inflow. Now it's stable, but there's no new money coming in, which tells me that it's still going to be very difficult for juniors to find money.
And speaking of gold, where do you see the price of gold in the coming months or the year?
Well, that, of course, is something that's very near and dear to my heart, as you know. And so just taking on from the very first question you ask, the short answer is a lot higher, okay? And my take on the amount of, inflation that will be created, we still don't know, because so much of it has to do with supply chain and what will happen to the supply chain. As you know, with the lockdowns that we've seen around the world, and the various edict by whether it's President Trump on no more export of any medical equipment. What you've seen are border closing, very difficult to move things around. The world will be different when we come out of this, okay? Like the whole idea of just-in-time management, people will say, like, I can't afford not to be able to run my factory. I can't afford to. So you'll see very, very different ways to do business. But going back to the gold price, one of the key indicators that I use is the Dow Gold ratio. To me, when I look at it over 120 years, what it is, of course, we call it Dow Gold ratio. I sort of invented that ratio back in 1999 when I was writing my Franco-Nevada annual report. It's the first time you'll ever see it. And at that time, the ratio was 42 to 1. So it took 42 ounces of gold to buy 1 unit of the Dow. And of course, at that time, gold was $250 and the Dow was 10,000. And so I said to our readers, what would you rather own, a unit of gold or a unit of the Dow at this ratio? And of course, it went all the way down from 2000 to 2011. It went all the way down to almost 6 to 1. By 2011, don't forget that the gold price had moved up to almost 1900. It went past 1900, and in fact, and the Dow was just under 12,000. Okay, the Dow didn't move that much, and so the question now is, where are we today? So after it went down to 6 to 1 in 2011, it backed up all the way to 22 to 1, where it was just a few months ago, and now it's down at about 17 to 1. And the question is, where does it go from here? Well, again, if you look at the chart, and you can go on Google, just put Dow Gold chart ratio, and then it'll pop right up on your screen. Back in 1980, that ratio was 1 to 1. At the top of the cycle, the ratio goes back to 1 to 1. In 1980, February 1980, the Dow was 800, and the gold price hit 800. And we saw the same thing happen in 1934 when the Dow went down from 360 to 36, and gold went from $21 to $35. So it was almost 1 to 1. So my prediction is that sometime over the next 2 to 5 years, we are going to see that ratio go back to 1 to 1. Now, you're going to say, well, the Dow today is like 23,000. You're going to say, Pierre, you're out of your mind. You're insane. You would have said the same thing if I had told you that we would see 1 to 1 in 1976 or 19, because don't forget, back then, the gold price had come from $35 all the way up to $800. Think about like how much it moved, and yet it did end up at 1 to 1. And I do believe now, the question that you can, ask is, will the Dow still be 23,000? And it may not. It may be cut in half because of the recession that we're seeing right now. I sort of doubt it. But even if it was 15,000 or 12,000, you're still looking at a huge, huge leap from here in terms of the gold price. And of course, the gold companies, they are in a very sweet spot right now because of energy prices. And I think it was one of your other questions, but I'll kind of, go right up to it.
We'll get to it. We'll get to it.
Well, yeah, 20 to 25% of mining companies' operating costs is directly energy. So now you've cut that by half, so it's like saving 10% of, and that goes right down to the bottom line. So the gold mining companies currently in this environment are going to be printing money. They're going to be, I would say, minting, because it's really what they're producing. They're going to be minting money. And they will be the star performers, I believe, of all industry coming out of this recession. I really believe that.
And do you think we're going to see an increase in the demand of gold, whether it's physical or gold stock, as a result of what's happening right now in the world?
Well, the best indicator for that is the inflow of money into the gold ETF, the GLD, for example. So this year, and we've only have like 3 months and a few days, we've seen an inflow in the gold GLD that is backed by the World Gold Council, which we created when I was chair of the World Gold Council, by almost 300 tons. So you think about this, this is real demand, people buying the GLD, and it's fully backed by gold. 300 tons of demand this year. That is just in one product. Okay, there are several other ETF, which I don't have all the numbers, but it just gives you a sense of where that's going. And then if you try to go buy gold coins from your local dealers, they're out. They're all sold out. Okay, because the Canadian Mint is closed, because they closed 3 of the largest refineries in Switzerland for weeks on end. There's a real shortage right now of physical products, particularly in the small size, okay? The 10 gram and 100 gram and the 10 ounce bar, 1 ounce bar, all the manufactured products are in very, very short supply. Now, if you want a 400 ounce bar, there is 4,000 ton of it in the London vault. There's plenty of it. It's not that we're running out of gold, physical gold. It's just the shape that you want may not be available.
So I have another interesting question here. Some people have alluded to a reset of the currency regime as we know it right now, and that the paper currency may be replaced by a currency that is convertible freely into gold, like i.e. solid gold. Do you think that statement is reasonable and plausible?
The short answer is no. Because at the end of the day, the politicians will never surrender their power to fiddle with the tax code, fiddle with giving out, to friends and whatnot, write laws that favors them. They will not surrender that power to gold itself, okay, which is, it's I think it was Brian, one of the U.S. contender to the presidency. He called it to surrender to the cross of gold, and because it's like being nailed to the cross. You cannot do anything. So the short answer to that is no. I don't think that we're going to see a return to the gold standard as we know it. It would be way too difficult for a politician to accept. I think that we will see, though, what we will see, I believe, down the road is the Chinese currency. I think that China is really trying to build up their gold reserves to be able to end up with the currency of last resort, and essentially replace the dollar as the currency, the last reserve currency. But to do that, they need to really build up their gold reserve, and looking at, if you want what the European banks have is about 20% of their reserve in gold. If you want to be in that ballpark, China will have to something between 15 to 20,000 tons of gold. And right now they're about 2,000. So they got a long way to go before they are able to get there. And then their currency would have to be freely tradable, which is not. So it's going to take probably 10 years to 20 years to get there for China. But that's my belief, the ultimate end to the U.S. reserve currency. Just like it was when Britain was the reserve currency, the pound was the reserve currency. The U.S. took over. The next one to take over will probably be China, but the conditions are not there for that to happen.
And with mines and refiners shutting down, what is the outlook for the supply of metals and maybe the impact on the price of metals as well?
Well, because the London Exchange trades on the 400-ounce bar, it won't, and the availability of those bar is, quite readily available, and they can borrow bars from central banks if they need be. So in terms of the overall trade for the gold business, it's not going to have, I believe, any impact. Where you're going to see impact is the supply chain disruption. For example, there are no flights out of South Africa, so they can't ship their bullion to Switzerland or to London. The Swiss refineries, as of yesterday, they started working again, but only at 50% capacity. So it will take weeks and weeks, maybe months, before some of the products become available. In the meantime, you will have to either buy already existing products or just be patient and wait till it becomes available again. But it's a supply disruption that's limited in time.
Do you think royalty companies will do better during or after this crisis?
Royalty companies will always do better. Now, I've got a slight bias. I have a slight bias.
I love it.
The royalty companies, because they have essentially no costs. I mean, Franco-Nevada has 38 employees. So, and they're all on the payroll. We haven't laid off anybody. We don't need to. So, whether the revenue, for example, is not quite what it was to be expected, it really makes no difference. And any increase in the gold price goes straight down to the bottom line. So the royalty companies are going to do very well, thank you. And in the case of Franco, because we're so diversified, we have royalty coming from 56 operations. Well, there's, only a number of them are impacted. The vast majority of our operations have not been impacted, and so they're continuing to go on. And because of that, I think the company is going to do very well, thank you very much. Now, some of the companies, for example, if you're in Quebec and they shut you down and you're a one-mine operation, you got a problem, okay? The whole crisis will affect far more companies that have only one or two operations in one jurisdiction where they have been mandated to shut down. If you're in Mexico, Mexican operations are all required to shut down. Well, you can shut down for a month, but and if you have a very large operations, when you come back online, most of them, the mill can be pushed a little harder and you can make it up. But for the small operations, you can't. If you got a 60,000 ton a day mill, for example, most of the time you can push it to 65, 66,000 for a month or two. And, you just, set your grinder a little, coarser, you set your, so you can push more material and you can make it up. But the small operation, like 1,000 ton a day, 2,000 ton a day, you can't really do anything. And those are the ones that are also likely to be more impacted.
And how can a young mining professional take advantage of the current situation, you think?
Well, at the end of the day, I was thinking about that question for quite a bit. And at the end of the day, in my life, I have realized that all the success that I've had is all because of people. If you surround yourself with great people, great things happen. So if you're a young, miner, geologist, whatever, the idea to me would be try to find a place where you have that kind of mentorship, where you can have someone that will teach you, that will help you and, do your 10,000 hours, just get down to work. Malcolm Gladwell, the 10,000 hours, be an expert at anything and everything. It's so true. It is so true. And you put your nose down and you get that guidance and you're going to do just very well. Thank you very much. So, And then if I was to look at the next 10 years, where would I think, the two metals that I would think of are number one, copper, number two, gold. That's where I think the bulk of the business, like if I look at growth, where's the growth going to be in the metal business? Copper will be the number one, and I think gold will probably be number two.
And I guess a more personal question for you, but what do you look for in a company before investing in it?
People. As I just said, people, absolutely. I look at who are the people that are running the company? What's their track record? What's the ethics that they work from? How much do they care about the shareholders? And how much are they paying themselves vis-a-vis what they, go to the shareholders? And how do they treat their people? Because that's really the essence of who you are. And usually, if you look at the people that have, become very successful, they have an ability to surround themselves with great people and the ability to lead them and let them do what they do best and set the ground rules, set the ethical rule, and let just them run. And that's what I've been trying to do, I guess, all my life. But that's what I look first. And then the second, I look at the asset. And again, sometimes I always say that the great assets will always migrate to great hands. Okay, like sometimes lucky people will find a great asset, but if they're not good managers, they end up losing them, and those assets always migrate to the great people. Because the great people will recognize the assets and they will buy them out and they will do the mergers, acquisition. But that's really where I look. So number one, people. Number two, the assets.
And Pierre, in this crisis, where are you currently investing in?
Well, copper and gold. Okay. I love both spaces. And of course, as you know, Franco-Nevada is my main company. And, it's been an incredible success. In the last couple of years, I helped start another company called Orla, which is a real mining company. And we just raised $75 million last week, in which I participated. I put in my 15%. And I think that this is going to be, a multi-billion-dollar company. We have a new copper gold discovery, so it's great. So I put more money in that. I put more money in gold stocks. I think that some of them have not performed as well. Or, when they all came down, I love Lundin Gold. I think that they've got one of the best ore body. It's brand new. It's going to be, and it was built by Louis Gignac, the best mine builder in the world. Okay, this guy is the golden standard of like building mines. And so I love that one. I've been buying some First Quantum, which mines Cobre Panama, I think under $6. It's a steal. It's a complete steal. And so there are a number of really great companies where the stocks have just been hammered. And you're buying them for like 1 year cash flow when copper goes to like, $3 or gold, where it is today. The performance, we'll see that performance coming out in the next few quarters. And I think that the stocks will all outperform. I love Alamos. I think that John McCluskey has done a super job running that company. And I also, Nico Eagle, I can't say enough about Sean Boyd. Okay, like the guy is a gem. And he's got so many great people working for him in Quebec and, everywhere. And he's got a great training program. So there are a number of really fabulous companies that have been selling at discount. And when the public starts to get into gold stocks, believe me, they're going to be a lot higher than they are today. All of them, okay? Because the public is not in the gold stocks. They're not. The indication for that are the funds flow into the gold funds. And I can tell you, the public is just not in the gold stocks. But it will come. It always does. I've seen 6 cycles. Believe me, it will come. You just have to be maybe patient a little bit.
I guess you've given a lot of advices, but any last pieces of advice for investors and including for millennial members?
You know, my last piece of advice, if you know, for the millennial in terms of investment, is screw up your courage, buy 100 shares of something, and you know, that's, and watch it, and that will be the cheapest education you've ever had. And because you'll start following the companies, you'll start reading their annual report, and then you will find out very, very early on who you can trust and who you can't trust. Because believe me, there are over 3,000 mining companies. A lot of them, I wouldn't trust them with a 20-foot barge pole. Okay, I wouldn't trust the people running them. And you may find that at your expense, but you know, first read the reports, look at the analyst reports, and then start putting a bit of your own money, and that's the best thing you'll ever do. Okay, you don't need to do a PhD, just buy 100 shares of whatever it is and start that way. You know, that's the way I started. Now, I got to tell you that story because it's too good. So the first stock I ever bought, it was on the recommendation of a geologist friend of mine. We'd looked at it. We thought like, yeah, that looks really good. And within 3 months, it was like, not only I doubled my money, I made like, you know, about 3 times my money. And I thought I was like a financial genius, okay? So, of course, I sold the stock and then like, okay, what's the next one? Well, the next one, I lost every penny that I had made in the first one. I got to tell you, best education I ever had, okay? It was a cheap education in some ways, okay? It was, you know, I thought it was very expensive at the time. No, it was the best education I ever had. So that would be, you know, one of the recommendations I make, yeah.
Well, thank you, Pierre. It's always a great pleasure hearing you. We usually give a token of appreciation to our speakers, whether it's like a bottle of wine or a book when we host our events in person. But given the current situation, we have decided instead that for each interview I record, and hopefully I'll do more in the future, but we'll give $100 to our mining initiative, Mining Cares, where all the funds will be given to United Way in Greater Toronto to provide assistance for those who are most vulnerable, during this COVID-19 crisis. And for all of our members that are listening right now, I'll provide a link and more information where we pledge to give a lot more money to this cause. And again, Pierre, thank you so much for your time. We all appreciate it, and stay safe.
Well, thank you. It's always a pleasure, and hopefully we'll, you know, your members will get more questions and we can do it later on as well. Thank you very much.
Anytime.
Thank you.
Thanks, Pierre.
Bye-bye.